All right, welcome guys. I hope you're all doing well. I don't know if this is lagging or not. No, it looks okay now. So yeah, sorry that this is going to be coming out a bit later in the day than we've been aiming for. The last couple have been coming out at 9 p.m. Around that time, you can see that's now 9:13. Not great, but at least we're getting it done, and we're just going to work to get those out a bit earlier. But I hope you all had a good Monday, a good start to the week. Once again, nothing really presented on the charts for me today, and you will be able to see that there was nothing really to catch on the charts. So yesterday's video we went over some potentials that could happen this week, and the last lesson also was kind of about how to navigate price delivery collapsing, or your idea or anticipation of price delivery collapsing, right? So if you had a specific plan for price that week, when does that idea collapse? When does that plan collapse, and how do you adapt with that, right? So now this week we're going to be watching how price develops over here, and I'll update you with trades that I take, trades that I missed, all that jazz, whatever. So starting with the day, you can see that we are still more or less ranging within this daily imbalance, right? No follow through just yet. The morning, right? So you can see that the proximal line of this imbalance is kind of acting as some kind of resistance level, right? Where we've come to the upper end of that, and we're now, we rejected it. So if we go to 4 hour, right, from a 4 hour perspective, you see that during Asia, we got this big imbalance to the upside right there, right? We leave that open, and then as we go into London, it was a potential that price could try and hold this and move higher, right? That we inject liquidity from here and move higher, especially after we've taken out this area where price was deemed as cheap. We transact below there, and it looked like we got some kind of rollover trigger, etc, right, etc. However, the problem here, one of my students asked me today, isn't this now in a state of bullish delivery? Because we got strong feedback, we grabbed liquidity from the lows, and we've shifted, right? So your classic kind of play is, if you're looking, let's say price has gone from point A to point B, right? And then this is a horrible B, right? and let me actually sort that out. There you go. Right, and this is your 50%, right? Bang, bang. Once price comes into here, right, on your 4 hour, you want to see price shift, right? Or on your 1 hour or whatever, right? If this is on your daily time frame, A to B, on your H1 or H4, you want to see some kind of shift. And you see we get that here, right? So in theory, this would be, and we run liquidity as well, right? So just to make that more in line with what we actually have, we do this, right? We do something like this below EQ. We try and run higher, we fail, right? Bang, we take out that SSL, and then we do that, right? And now you'd sit there and say, okay, that's your buy side trigger, and price can go long. In theory, that is correct, right? But what you have to start doing is paying attention to order flow. This is where so many people go wrong, right? Because you would be sitting here saying, I want to get involved in longs here, but look at the most recent delivery, right? So if we start from here, right, you see we get this liquid PA. Price was extremely liquid here. We don't get a single imbalance being printed from here to here, right? This one leaves a small imbalance, but then you see we end up dropping lower. Let's just get rid of this. And then we shift from liquid to illiquid after taking out this buy side liquidity over here, right? We transact at this above this area where price was deemed as relatively expensive, right? Liquidity is injected, offers are injected into the market, and we shift from liquid to illiquid, leaving behind this imbalance over here. We have this smaller one up here as well, right? But in any given moment when we have these two imbalances, the largest one is the one our eyes are drawn towards, and then we have this one over here as well, this smaller one, right? So we covered all this last week where, we get bearish array, we push lower, we create new bearish arrays, and then we have that new imbalance which gets induced here, right? So we induce that showing that, okay, cool, we could have potential for some bullish intent now. Now, where you have to, start using your head a bit and reading order flow is that this high, right, it's this high that caused this move to the downside, right? You also have this one, right? This caused that final leg down, but this is that trigger which initiated this sell side move. And these are the imbalances that it left behind, right? This was a shallow tap into that, which caused this move down. But you can see now that we're pulling deeper into that, rebalancing that a bit deeper. And then what we end up doing is creating new bearish arrays, right? So from this imbalance, so let's get rid of this one for now because it got induced. From this very small bearish imbalance, we end up creating new bearish imbalances, right? Showing that bearish order flow is in control. That bearish imbalance induced bullish intent and imbalances, showing that again, bullish intent is in control, right? So we had bearish imbalance, price comes back into that, creates new bearish imbalances, bearish intents, which induces the bullish intent, right? So I wouldn't want to be going long in this area here. Ideally, I want to be trading short to this sell side liquidity. And especially now, right? Obviously it's clearer now, but this low didn't create anything significant. So going into tomorrow, if we don't take that out, something like this, right, can be viable, at least to this low over here, right? But again, just to kind of focus up on today, the reason why I didn't want to get involved in any longs today, especially after this, right? At this point, I was okay with getting involved in long, but you have to understand that your imbalance is formed in Asia, right? So if we pull up the H1 on the other side, right, your H1 imbalance right here, well, not formed in Asia, but it's formed in like the first hour of market open, right? You see that there. So 10 p.m. We push up, and then 11 p.m. we create that expansion to the upside, which doesn't hold much weight. And you see how price just pulls through that. This was a very illiquid move, not caused by large buyers, but due to low liquidity in the market. And we can see that was the case because of how price just drifts back through that, back into this volume base over here. So back to this 4 hour, you see that this bullish imbalance was created, again, early hours on a Sunday night, late on a Sunday night, but just as the market opened, we can get rid of that, right? We induced that on this candle. So I wouldn't, again, you could have been looking to go long here, right? As price takes out Asia low, tries to play this, right? But then you're confronted with the fact that this is an Asia array, and you don't really want to be trading out of arrays that are formed in Asia, especially on a Monday morning, right? Even trying to play London session on a Monday is not ideal. You don't want to be doing that. So we stayed away from that, and you see why that was the case. Trying to play longs here just doesn't work, right? So then you're left with this, and then you understand that, cool, at 10 p.m. UK time, sorry, not 10 p.m., at 2 p.m. UK time, so going into New York now, we get the 4 hour close, and we induce this bullish array, and we actually leave behind a bearish array, right? So again, that whole concept that I walked you through, where the reason why you don't want to be going long is because bearish intent had created new bearish intent, meaning that bearish order flow is in control. It's taken out bullish order flow. This low didn't create a significant high, right? These lows did not take out anything significant. You can say it took out this. Is it really that significant? Not really, right? This bullish imbalance didn't lead. The arrays that were created in this leg didn't create new highs, right? So this whole leg is pretty insignificant, right? And then this array obviously creates bearish, or we get this array that induces this bullish array. I'm just trying to put this in as many different angles and hit it from as many different angles as possible. So once that happens, we get that bearish imbalance, and then the narrative more or less flips to this, right? And then we wanted to play something like that, and we just don't get it, right? We just don't get it. On the H1, we can refine that H4 imbalance to this, right? Which also lines up with a BPR. Nifty little beeps. Bang. and it would have been nice to get involved in some kind of short from here. But then again, right, looking at that H1 is you've got this bearish array and then you've got this bullish array that you're trading against. So we get this thing here, which we have, which is a trapped price action, right? Trapped PA, because it's trapped between these two arrays, and you can see how price just ping-ponged between that back and forth, and then trying to play that. Look, if you got in around 2, 3, 4, 5, whatever time, you would have still been in this trade for very little positives at 9 p.m, 9:30 in the evening. So it just wasn't worth it. Very happy we didn't get involved in that. We didn't get any ideal liquidity grab and shift. It just didn't happen. And yeah, so that was the main lesson for today, right? Understanding, number one, that when you have these like, even though in theory, yes, this is a liquidity grab, we run liquidity, we tap into an array, which I don't think we actually do tap into an array directly, but we tap into this distal line, right, of the imbalance. After we run liquidity, we tap into that, right, and then we get this shift, but we are respecting bearish arrays, as mentioned, that bearish imbalance, and we are creating new bearish imbalances, showing that bearish order flow is in control and it's inducing bullish intent, right, that was created and generated, so to speak, in early hours on a Sunday, again, late hours on a Sunday. So yeah, understand that. And then the final piece of that puzzle was the trapped PA, right? When you have price action stuck between these arrays, right? And again, in such like 50-50 conditions, there's reasons for this to, you know, pop up. As we said, there is that kind of shift there. So price could just be doing this, especially after sweeping higher time frame liquidity. There is the potential for this, but at the same time, again, bearish order flow being respected and forming this chain, this could easily just roll over. And then on the 1 hour, you're confronted with this trapped PA. So yeah, when you have this scenario here in high, when you have your daily time frame, when your weekly time frame's unclear, your daily time frame's unclear, and your middleman, either your H1, H4 are all unclear. Look, your H4 is unclear, your H1 is unclear, right? With trapped arrays, right? You've got shift into opposing array, respecting that array, creating new bearish arrays, right? So you're bullish, but you're bearish. On the H1, you're bullish, but you're bearish. On the daily, you're bullish, but you're bearish. And the weekly, you're bullish, but you're bearish. It's all unclear, right? You need to just leave price. Just leave it. Stop getting your hands burnt, trying to, you know, trying to force trades here. It's that same concept that we went over in the last lesson of knowing your plan and getting involved when price syncs up with that plan, right? So the start of the week, our plan, like overall, was to see some kind of, you know, follow through here. Obviously, when price closed, we were down here, right? Bang, we wanted to see price push up here and start showing this, right? So once we start closing above that, if we start taking out this buy side liquidity and we get bullish arrays, right? Newly formed bullish arrays which take out highs, that will confirm bullish order flow, right? Because then we start to leave this low behind, right? We start to, if we get arrays here, we start to leave arrays that will make it harder for price to revisit these lower levels down here. So we create resistance in the way of that low, and we can start to trade away from that low and into these low resistance areas. So we're trading away from high resistance and into low resistance. I hope that makes sense and gave you an aha moment. But as of right now, that we're not in sync with that plan. We're not respecting bullish arrays. We're not showing bullish intent and a strong rollover to the upside. We're not getting that, right? To confirm that strong rollover, we need buy side to get taken out one more time, induce all this bearish intent that was created, create bullish intent, and then we can start riding that to the upside. So that's a wrap, guys. I hope you enjoyed that. Just quick gems daily for you guys to take on board and implement straight away. No trades today, unfortunate. I'm looking forward to when we can get another trade in and I can explain it to you guys. So yeah, I will see you tomorrow.